Good day to our numerous stakeholders on the supply chain. My name is Stanley Kurira. I'm the manager for customs valuation and classification at Namra new building, which is situated at Town Square. We are based at the first floor west, and you are free to visit our offices if you require information. During this session, I will talk about customs valuation, but I will be specific on three aspects. Firstly, I will talk about what customs valuation is. We will touch on, secondly, on the importance of customs valuation, and then we will look into key elements that you need to know as a trader when you are valuating goods imported from outside Namibia. So what is customs valuation? Customs valuation is the procedure applied for goods imported and where we attach duties and taxes on that value. Importance thereof is, as you are aware, country can only sustain itself through duties and taxes that we collect on behalf of the state coffers. And when we mean state coffers, we are acting or we are collecting revenue for the state, and it's not our revenue that we collect, it's for the state. So that money is being put into state coffers. Secondly, importance thereof is also that it is essential for us to collect this revenue for economic growth, and also important for aspects for social welfare as well as for development of Namibia at large. So what are the key elements that we also have to consider when we are evaluating goods when it's imported? The first one is the sale. So what we mean by sales is there must be a transaction between the buyer and the seller. Importer, which we refer is the buyer, and then the seller is the supplier. So the supplier and importer must have an agreement, contractual obligation or agreement that they are importing goods and they are paying price for those goods. So that's where the customs valuation comes in. Secondly, the goods must be sold for export from the country of exportation to the country of importation. And it is very important that there must be a price paid for those goods. Now the goods entails in quantities, or it can be a one item, and there must be a commercial invoice for those goods. And therefore, it's important and paramount that colleagues and traders still need to know that there is supporting documents when you are importing goods through the port of Namibia or through the entry points of Namibia. There must be supporting documents such as commercial invoice, there must be packing list for the goods, there must also be all the supporting information like whether there was discount given, whether there was selling commission in this respect, etc. So those supporting documents must be accompanied by the sales contract, and then the goods must be declared at the point of entry. Lastly, there must be also cost consideration in terms of Article 8 of WTO valuation agreement. The cost, what we are referring to, is the cost incurred by the buyer at the time of export. There may be inland charges, there may be packaging or stuffing of the container. That cost needs to be added to the price paid or payable. Equally, the cost with labor. If you have a labor to pack tires, for example, and stuff it into the container, that cost should be included, and it must be declared as such. Yeah, before I conclude, also note our important stakeholders that Namra Customs Office that is tasked with valuation policies and SOPs. They are doing these things in line with the law, with Customs and Excise Act. There are provisions under Chapter 9 that deals with valuation of goods and principle of this, how you have to declare the goods, how you have to value the goods. So please adhere to those principles. Equally, take note that customs is also under obligation to provide you the right to be heard in terms of Article 17 to explain how the determinations was made. And then also take note that in terms of Article 17 of WTO valuation agreement, customs have the right to doubt the value that is being imported. So therefore, we are asking you please to declare goods correctly, honestly and truthfully so that at least when you are being assessed, you provide the evidence as to how the goods was being declared. Note that our traders, or important traders and stakeholders, being the clearing agent, clearing on behalf of importer or exporter or interested person or a transporter, are warned that any offense or any infringement of the law will be dealt with our enforcement and penalty guidelines. And as to indicate to you, false documentation and false declaration may require you to pay up to 40,000 Namibian dollars, or 3 times the value of that in terms of Section 94. So that is one example that I can give to you. False or invoices that is being played with, or it's fake, those will have 40,000 or 3 times the value of goods. So penalties are being set. Please just adhere to that. That is what I wanted to share with you this afternoon or during this day, so that you can know those are the aspects that one should consider. Thank you.